Hey investor! Now this video is meant for beginner investors. If you are already an experienced investor, then you should just watch one of my other videos. But today, I would like to share my tips with you what you should do as a beginner investor with your investments when you have something like $10,000 laying around. Now, this video is not about like which stock you should buy, but it's more about the choices you should make as an investor. This is to help you as a beginner investor to get clarity on your investment method so that you don't really have to randomly think, I just invested in Shell. I bought 1,000 shares just the other day, and today I saw it grow for about 5%. But the question is, should I sell it right now or should I wait slightly longer? What should I do? My name is Lukas and I'm an investor from excelwealth.com. I'm always interested in sharing my ideas on personal finance, investing, and real estate just with you. And of course, if you stay until the end of this video, I'll even share with you how you can get started right away as a beginner investor. It's great that you've made the choice to watch this video because, hey, in the end, you don't want to be wasting your money randomly, and investing is the way to go. That's great. So now the first decision that you need to make is how much money can you miss, like right now. If you know that you have $10,000 on your bank account, that's great. But can you use the full $10,000? Or will you have to choose to use a certain part of the money and spend it, before spending it all? Like, I would like to keep 5,000 euros for emergencies and I could totally invest the rest of the money. Now, if that's the case, that's great. Now, I can see you thinking, Lukas, why is this a question to begin with? If you have $10,000 on your bank account, that doesn't just mean that you have to invest it all. For beginner investors, it is very important to make the choice and the decision, with yourself mainly, to be aware how much will you be investing, how much money will you be setting aside to let it grow over time. And yes, a lot of people are saying the $5,000 that I have is what I can accept to lose, so let's invest it all. But let me tell you this, that phrase doesn't make any sense at all. As if investing your money always means that you can afford to miss or lose that amount. That's nonsense. I totally get that people would always say investing is so risky and this is why I'm not going to do it. And that's not true, because it really depends on what you will do with your investments. But okay, back to the question. How much do you have to invest? This will make a huge difference in your whole investment journey. Therefore, it is important to know exactly how much will you be using to invest. Lukas, I already know how much I want to invest exactly, the exact number. So tell me, what is the next step? Good, very good that you know how much you will be investing. Now the next question is, which investment style would you like to apply? Now I always believe that there are 3 styles to choose from. Now, the first one is active investing. And to make this slightly more understandable, active investing is what I tend to compare to exchanging your time for a result, or in this case, changing your time for money. So you'll be inputting your time to make money using money, and the outcome will possibly be more money. Now, in active investing, it's not like a formula. Inputting more time will always result in more money, because yes, it could also result into losing money. Let's not go into that for now. Now, the second style is passive investing, and in this case, you have to understand you do one time the work up front, and then you invest your money into a certain stock. And you wait, and you wait, and you wait. And in the future, you reap the benefits from the work that you've done in the past. This sounds magic! This is the magic option. Like, you do once work and you get money always. And yes, the idea is like that, but you have to understand the benefits might not be as big as you wish them to be. It's not like that your returns will be super huge because you did the work up front and you don't want to do the work anymore, because you did them in the past and now you're just enjoying it in the future. When you take a look at those two, active could result in high returns but could be risky. Passive is a nice one to work in, it's nice, but the returns could be low. So in the end, that's just more like a side income. And therefore, I always say there's a third option, which is a combination of both. Now, it's partly active, as it requires your attention once in a while, but it's more done, But once you've done the work and the investing, it's mainly passive, as you will not have to be focusing on it all the time. You don't need to time the market, no need of checking the news or logging in. So Lucas, this is the real magic then. Well, that's a yes and a no. In the end, investments will always require time, money, and effort to make it work. So it could even go wrong. If it goes wrong, then why are you telling me this, Lucas? Well, you have to see it like this. You could manage the risk, and that is what we're going to discuss in the next step. How do we manage risk? Well, it starts with setting a certain strategy of investing. And for a beginner investor, I would like to say there are two distinctive strategies. The first one is lump sum. I know this one. That is like ordering your dumplings in a Chinese restaurant. Lump sum, dim sum, dumpling, sounds all the same. They do sound similar sometimes, but lump sum is actually spending one amount. For example, like $10,000 that you spend it by purchasing all in one stock, and then with that amount, you just wait it out in the hope it becomes more. That is lump sum. If this was timed well, you could make a lot of money, like GameStop a while ago. Those who were following Reddit page, Wall Street Bets, they just joined in the rally just before the prices really rose, and they bought it cheap, and the moment the prices actually rose so high, they sold it off to make a nice return. That is a good example of lump sum strategy. You use it once, put it in, keep an eye on the market, sell it off. And yes, if you're that person still holding on to GameStop shares right now, waiting for the prices to rise again so that you can sell off your stocks as well, that might be the hardest part of lump sum, because if you're trying to time the market, it could also mean it'd be your downfall. I'm sorry. Now, the second strategy for beginners is the dollar cost averaging. But Lucas, I don't use the dollars. I am in the Eurozone. I live in Europe, so I use euros. So how do I apply this method then? That's a very good question. But then again, the name is, of course, the dollar cost averaging. But it is also known as the systematic investing, meaning you actually set a frequency of investing like once a week or once a month or once a quarter, and you invest a fixed amount of money each time, and depending on the market, you will be able to buy more or less with the same amount of money that you have. This way, you will not be timing the market, but you have to believe that the company that you invested in is going to grow and sometimes fall. But what's the advantage of this method then? Well, you just buy each time you log in, no matter the price, high or low. And this way you eliminate the emotion of trying to guess if the price is either high or low. Okay, but then what's the difference between the lump sum then? Well, the difference is that you invest a fixed amount of money each time you log in, instead of investing one amount at one time. So you're basically just spreading your own chances within that stock that you're purchasing. And therefore, you might reduce your risk, but you're also reducing the risk of losing your money. And that's a great example of risk management. Now, there are more ways to reduce risk. There's a hedge fund, but hey, we're talking about beginner investors. And most likely for you, this is already good enough for you to get started. Okay, now the final step for you as a beginner investor is to get started. Now, if you already know the investment amount, if you already know your investment style, and if you already know your investment strategy, just look into what you really want to buy. Research the stock, if it could perform short term and long term. If you believe that you found a certain stock, good for you. Now, the only thing is, invest your money into it using the methods given. And this is how you get started in your investment journey. Make money, achieve your dreams, and enjoy your freedom. I thank you very much for watching. I'll see you in the next Happy Investing.